Good morning. Welcome to Options Center. It's Monday, November 4th, pre-voting day 2024. So we're going to go through SPY on multiple time frames. We're going to go around the horn on the daily time frame with IWM, SMH, QQQ, VIX, and DIA, the Dow as well. Got a lot of stuff going on, a lot of parts turning, and I want to kind of shape you in the right direction of what could and what I think is going to happen. All right, and then we'll finish off on the 65 for the probably SPY and QQQ. But I think Qs and VIX, so make sure you stick around. I think the Qs and the VIX are going to be blatant trades. I think they are the most obvious on what happens. Okay? So if you're new here, go down to that bottom right-hand corner, hit that Options Center logo and subscribe. Don't forget to like the video. And we're doing this intraday, 11:30 a.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member supporter. And that's 99 cents. All right. Thanks again. We did a video on Tesla today. That's going to be our hedge to the upside for the election. Weird, huh? I'll explain it more in a members video. So if you're a member, make sure you check that out. And that's a YouTube individual analysis member. We have SPY on the monthly time frame. We have 2000 top, 21 top, 24 top. We're getting this potential reversal candle. I think this will play out. But right now, we have to wait for the trend line, the throw over, to actually break down and break down from the 8 EMA. That will be very negative in the long term. We're going to run through the high time frames a little bit quickly. And by the way, put this video on 1.25, play it on the 1.5, something like that. Get this information much faster. You can watch more videos in a shorter amount of time. Here we go. So weekly time frame, this trend line here, rejecting off of it. And now we're fooling around with the 8 EMA. This is where I think we're getting our micro bounce from. Okay, this clearly could break down, and I'll show you kind of two scenarios. Clearly could break down to the next point, and this was what we were looking for initially anyway. But again, we'll have two scenarios. This is a good spot for a bounce. I thought that's where we were going to get about 565 zone. We didn't quite get there, and that's because of this 8 EMA. And also, I'm not going to show you the other board here. Let's just move directly to the daily. So underneath that would be that 20 moving average, which is our trend indicator on the weekly. Okay, so we're starting to breach. We're starting to get this negative aspect, and here's why we're holding the 50 moving average on the daily time frame is an important indicator. Okay, it's an important spot. So we got the initial move off of it, bounce inside A, and we're just kind of holding this area here, but we're rejecting off that 8 EMA. That's important. That worries me going into these catalysts. So ultimately, does the original plan play out to where we reject going into the election and we get this bearish move? Very similar to breaking down here, holding that 50, breaking down from it, very rapid, and then a bear trap. Okay, rejecting off the 8 EMA, just like we are now, inside day, next day rejecting, and then a breakdown to it, come into support, get a wick out of it, and have our bounce. That's one scenario. The other is we go our bounce directly. Maybe close the gap, test the 20 moving average, and continue lower. I'll show you what that looks like on the 65, okay? But just know probability in the longer term, this is micro term that we're playing around with. This is within days to week or 2 weeks or so, you know. But if you're playing to the downside, we already broke down. We have technical damage, and this thing is gonna go lower. It's just a matter of how it breaks down. Okay, break down, bounce, then break down, or bounce from here and then break down. So let's go to the Qs. And again, we'll go through this on the 65, but I'll show you from this stance. We haven't broken down from, you know, the major wedge yet, but we did break down from the minor wedge here. Okay, so gapped underneath it and then broke down from there. Again, very bearish. So do we go directly to back test and then break down more, or do we go down just a little bit further? And I think we'll have relative strength in the Qs if we break down. So if we break down first, we have the 50 moving average down low and good support. We have a bowing arrow, support resistance from this triangle, and then some support and resistances. I'm not going to go through all that. So we can get our bounce a little bit lower, and that would make sense that this is a wave 4. All right, and then we bounce into FOMC and then get our reversal. Okay, so 2 major catalysts, Tuesday election, and I don't know how that would play out with the results as they get results throughout the day, maybe, you know, leads on the day or whoever's in, it doesn't matter to me. You get a reversal intraday Tuesday, or waits till final results on Wednesday. I don't know. And then perhaps we get a bounce into FOMC. So we'll have to see where price takes us, but volatile week. All right. So we already did our damage. Breaking down our next stop here, no matter how it happens, bounce first, then drop, or get a little drop, create divergence, bigger bounce, and then the drop. IWM is in a peculiar place. Okay, it's rejecting off the 20. Is this what takes us higher? It's possible, but not probable. We'll just have to see what price action does for us. Maybe tech is weaker and IWM is stronger, and that would leave SPY in the middle. Okay, or we simply could reject from this point. This is a 20 moving average, rejecting off of it for the moment, and this is on the lower time. I better go around the horn on the lower time frame because this looks like it's just a little flat pattern, and this could be a 1-2-1-2 setup. Okay, and then if the market's going to bounce, tech is going to have to be relatively stronger to hold up the market. So we are already short small caps. We're short all the way around the horn, but we do have some calls for protection at this point. I know that I said I was not going to, but price went lower in first, so it set us up for a good hedge trade. And if you look at the tech bounce video that I released for members, I released it to the public. That was a good indicator that we still had to bounce because those were clearly not too oversold because they had a bear trap today and it's bouncing out of it. So DIA, this is very bearish. Could get another low here. It's just trending. It's underneath the 50. Doesn't look like it has much below it, but we are coming into some support here. All right, so this support we could have a divergence if we get a little bit lower right into support about the 415. And then this potentially could do that back test. So I think this move could be done here, but this be an A, an expanding flat B, and then a C. Okay. And I'll just put it out there. I think Boeing would lead this C wave higher if it does get that bounce that we're looking for. I think Boeing's the one that really gets a kick out of it because You got so many catalysts. So there you go, freebie. SMH. Go to the daily. Still just a bear flag. In this, I clearly think is a 1-2 setup. And now it's just a matter of this being a little bit more bearish. So it could get a tiny bounce here. But I think that's it. 250 is kind of the max there. And so if you're super bullish Nvidia, you think Nvidia is just going to go so much higher, I would recommend, considering that might be wrong. If this is an A, B, C, and Nvidia is super bullish for some reason, we got to get above the 8 and the 20. You get above the 250, and then I think you could trade that safely, and then that would probably tag the top of the flag again. Okay, so but that's going to drag the Qs higher. It's going against my thesis, but I don't have to be right. So we're squeezing between the 50 moving average and the 8. Also, that 100's right there as well. So maybe this just bear flags and then heads lower. That's how I'm seeing things, and that's just my opinion. So the VIX, I think, is obvious on the daily. I think this is a very obvious indicator for us to know that our move down is going to continue. You have an ascending triangle. We're at resistance again. Okay, we get above this, I think we're already starting to move down in the market, and you have to be very careful with any longs that you have at that point. It's as simple as that with the VIX. This is a very, very clean look at things. All right, so let's go back to SPY. Let's go around the horn on the 65, see if we can sum up what we're talking about here. Okay, so I'm playing this as this flat pattern. So we have an A, B. Oh, excuse me. Sorry, this is to me, this is a wave 1. Let me just go traditional. Sorry. Wow. We have our our bearish rising wedge, held on, broke down. So the damage is done. And now I think we're marking time. I think we're going to correct into again, to the election and FOMC, which I mark those here. So that's tomorrow and Thursday. All right. So I think with these indicators, we're still looking a little down here, but I think that's going to curve up on the slow stow and give us a bounce into at least the election. And we'll see what happens there. But we were oversold. We're getting that bounce. I have a feeling we have more to move. Now, the MACD, we can go really low on the MACD. This doesn't have to be the bottom. If you look way back there, look how much room we have. Okay, this could reject clearly off and continue lower for momentum. But what I think might happen with a further bounce is that we just go retest the 0 line. And then we have much, much more room to head lower. And that would be our wave 3 move down there. And so what do I mean by wave 3? Let's look at this pattern here. A lot of stuff going on here. I didn't show you the time and price relationships because we go through them over and over, and we know that we're getting into the election FOMC. I think it's pretty obvious. So how I'm counting this right now is that we have a 1, 2, 3, 4, and 5. And so that means the wave 1 is done. Wave 1 is already done, and we're looking for an A, B, C. Now, do I think we're going to go this high? Now that we have a flat pattern, it's going to be very volatile. But now that we have a flat pattern set up here, we're down to the 887, very deep B retracement. I'm looking at this as an A, B, and B can go further. B can exceed the low. And then a move higher. So at this point, I'll have my trades out unless any runners or whatever, or hedges. I'll have call hedges by the time I'm turning back around my trades into these 50-60% moves here, because I just don't trust that the market's going to hold up very well. All right, it looks like it wants to still go a little bit lower. It can break down, make a new low. And you can count this a different way too. Because we're rejecting off the 382 from this high, I know I'm getting to a lot of jargon, but maybe the wave 5 is a little bit lower. So it doesn't matter to me. This could be, if you're a bull, then you're looking at this being an A, B, and this is clearly a structure here. And so that has to play out. Did it already play out? If you're a bull, you're going to argue that this is a 1, 2, 3, 4, and you're getting wave 5 here. And then so this is just a corrective wave and you're going higher. That's the bullish scenario. So if price does go a little bit lower than this low, I think that's a perfect trap scenario. Then we have no idea. Is it a bullish or bearish scenario? I think the damage has been done already, and I think that the bears will continue this after a sharp move. So this will be a fake break. We'll have bullish divergence. If we make this new low here, we'll create bullish divergence and we'll get a snapback. And that snapback could be pretty nasty. So we'll be ready for any type of move. Now, the thing is that if that happens, going into the catalyst, then I think we get, sorry guys, sorry about my voice. Then I think we could get a sharp move because it would be an impulse wave C. And then just as fast into each or one of the catalysts, we can reverse hard. Okay? So just protect your positions. That's the most important thing through this. But ultimately, I think we continue to the downside. Let's go to the Qs. Now, this is why I said this is a much more clean look at things. With the Qs, we already broke down from this wedge here. Is that back test there and that's it? And we go lower? I think anything's possible, but I think that it's more likely that the catalyst that we don't break down a day before a catalyst, you know. So I think this is going to hold. I think we're getting a flat pattern, again, a deep retracement here, and I think we might go test and close these gaps a little bit higher. That would make much more sense. And what I mean by this is clean, we had an impulse wave down. And so there's still two ways that you could look at this. If you're looking for this impulse down to continue, and then this is just a 1, 2, 3 into wave 3, and this is a wave 4 into the 382, it makes sense. Then we're looking at a move lower. Okay? We're looking at a move lower for wave 1. Now, this also, we just can't tell. But I think we'll get a nice bullish divergence if this low is taken out. Okay, we just can't tell, but this also could be an A. And I'll put this in, see if we can borrow some of these. We're not going to need them anyway. We're getting way past this. Okay, so I think wave 2 is in on a larger degree. And we're looking for an A, maybe an expanded B if price goes lower, or the B could be in already. And then a snapback, maybe with the election. We just get this bullish ramp, close the gap, and then after that FOMC. And get our crash resumption. To me, this is a clean 5-wave move down. So I like this scenario to where even if we get a B wave, it shouldn't exceed very far below this wave here. That would be a trap and then higher. Okay. So at this point, this could be a wave 1 into wave 2, and we get 3, 4, 5. But again, if we want to waste time, if B goes lower, then you got to start that 1, 2, 3, 4, 5 all the way over again. All right, we're too oversold at this point where this is going to continue down. Now, if it does, and I'm wrong, and you have this, maybe this is a 1, 2, and you get this 5-wave move down, much lower, then that's when I'll clearly make this a larger degree wave 1. And so we still have our swings, our long-term swings, out further in time. So with our hedges, we're still going to do well. Even if the price does go lower, we'll know that we have to re-hedge again at this point down lower. So if you see a 5-wave move down here, that just means this is a 1, 2, 3. Wave 4 happened already, and then we're looking for 5. And we still need to get that kickback rally. So either way, we'll be looking for it. Rally after the election. Maybe we go down for the election, rally into FOMC, down after FOMC. But at this point, I'm looking for an A, B, C. This high, I'm not going to play it that far. So this high, I don't know. I don't have that answer. IWM simply could be in a scenario where it's getting lower highs and lower lows. I mean, this looks like an impulse wave. 1, 2, 1, and then an A, B, C in a wave 2. So this can be done and continue lower. Looks a little bit different here. Has plenty of room to the downside already. Yeah, the IWM is so sporadic. It could sharply move down, but then you need tech to kind of hold it up a bit. So hold the market up. So we'll be looking at who's weak and strong here. I think that's, let me go to SMH and then we'll end it there. Again, this is a situation where some people are going to argue it. This is a ABC, and you go higher. You know, that says a lot about the market, that it has to go much higher. But I think this is going to be weaker. It's going to lead the market down. So I'm not looking for much. I'm just looking for 250. And maybe NVIDIA starts to correct and Tesla starts to take off. There's so many scenarios that can happen. So as things happen, you have to be reactive, very reactive. But ultimately, it's going lower, even if it pops and drops. All right. So I hope that helps. I can't tell you whether we're going to bounce first or even get a lower low and then get a snapback with these two huge catalysts coming up. All right. Thanks for joining us here at Options Center. Don't forget to like the video. We will talk to you tomorrow.